Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, guys. Let's take a look today again. Let's take a look at the euro currency. First, I would like to say that we have the good news. Probably somebody of you already know about this, that Roger is back. So Roger is the trader who is our fellow. It's providing the signals and analysis by the Napoli framework in separate threads on the forum. So many our forumers already love him, and he's providing really very valuable analysis and signals. And although he is not at home yet, but as you can see in his threads on the forums already starting posting that analysis. For example, it's just recently he's posted really valuable advance on the good insight on the long-term gold chart, on the Bitcoin market, and so very soon he promised that he restart the posting the signals. So that's great news, and well, let's waiting for that. On the daily chart, guys, on the euro currency, market has completed the first step of our trading plan. So as you remember in the weekly report, we discussed the possible next destination point. This market has ignored to show any pullback from the 115.80 area and continue upward action. Now it stands deep level bottom on the weekly chart. This tells about really strong background on this rally on the euro. And this is quite rare, happens when the financial markets stand in a overbought area for a long time and sell deep. So if you'll take a look at the weekly chart, you will see that market significantly overbought. So on the weekly chart, you can see that this week it already stands significantly above this level. So even last week closed was already above the overbought. That since this week market has moved slightly higher, it now stands deeply overbought. So this quite rare happens. You can see in the whole history since a few years. You do not see this kind of action. Here it was spiking up and then returning back down. Because financial markets feels very uncomfortable in overbought, oversold areas compared to the commodities. Commodities could stand there for an extended period of times and even live inside of the overbought, oversold for a considerable period of time. But financial markets, bonds, stocks, currencies feel significant pressure and do not like to stand above it. So that's why, as our first stage is completed, so market has hit 127 extension, 1730 is extension of this downside action. Theoretically, you could easily imagine here the butterfly pattern, so you will not be wrong. But since it stands at the bottom, so by the theoretical point of view, butterfly should not be formed on the bottom. That's why we just use the extension, not drawing here the butterfly pattern itself. So 127 extension is hit, and take a look. That market is also stands at the overbought and the daily chart as well. According to our suggestion, next step should be downside retracement. Here we talked a lot about what deep depth of the retracement could be, and have decided first to stick with the harmonic swings. So you can see here we have three types of the harmonic swings. This is the single harmonic swing. Here you have the half, here is also the half, and here 1.5. On the current circumstances, the most probable is the single harmonic swing, because 1.5 harmonic swing has been formed right after the first jump out after the strong sell-off. Since the bearish momentum here was strong and makes additional pressure on the market, it shows deeper retracement. At that moment, the only factor that could trigger the deep retracement is the weekly overbought. Theoretically, it is possible to get 1.5 harmonic swing, but let's first take a look at the single harmonic swing and see how retracement will develop. Retracement below this level is not interesting for us because take a look at daily oversold stands around 113.50, and we suggest that hardly market will break it on the retracement to the downside, taking in consideration the whole background and acceleration that we have. Potential next destination after retracement, this could be 1618, stands 120.25. This will be next target. To get more extended target, we need to take a look at the higher time frames. On the monthly and the weekly, we talked about in the weekly report as well. But here is two destination points that we could focus on within the few weeks probably. So now we stand in consideration of the pullback. As downside action just has started, we of course do not have any patterns, even on an hourly chart. You can see nothing interesting yet. It's just first minor pullback is starting. On the 4-hour time frame chart, you could see the things that we talked about that I have promised to you. So take a look. When we considered this picture on the weekly report, the harmonic swing was not matching to support levels. And I said, well, don't worry about that. As market will climb high and hit our target, you will see that it will match to the strong levels. And now take a look. Indeed, harmonic swing matched to confidence support around 1527, 1547. This is the confidence from the most recent upside swing here. So you can see on the daily chart of this swing. Here's actually, guys, I think that, well, it's probably will be suitable. Last swing up is probably suitable for a Jordan Apple action. Because take a look, this overall frosting action is very good. It's definitely more than 8 bars to the upside. And separately, this thrusting action is good for Jordan Apple brand butters, double repos, or something of that sort. So, for example, if the market will collapse right at 115.50, this will be confidence support in the follow time frame chart, harmonic swing completion. That could be great opportunity to take the long position with the brand butter trade. And whether this brand butter will lead us, who knows? Maybe it will be direct upside continuation to the next target, 120. It's also possible. So that's approximately our strategy. We are watching for a pullback. If we will get lucky, indeed, pullback will be more or less significant somewhere to the confidence on the follow time frame chart, and we'll get the brand butter trade. That will be great opportunity for taking the long position. Well, different scenarios exist here as well, so you could focus, for example, on the nearest ending support also, because we could get, for example, the half of the harmonic swing, because currently it's very difficult to assess what strength stands beyond this retracement and whether it will be enough to push market directly to the levels that we're talking about. So if you are not sure and you would like to get definitely the long position here, you could split your position in two parts and taking, for example, 30-40% around first level. If market will drop further, here you will take 70-60% of your position, and in general your average will be somewhere 1577. It's very good entry as well. Well, initially on the long entry, probably we will place stop somewhere below the confidence, but for that we need to take a look what patterns will be formed here. Maybe we will be able to calculate downside retracement with more precision. If, for example, it will be some kind of extension or something of that sort. But approximately, the trading plan stands as follows. So we're watching for a downward action. Supposedly, it should be one harmonic swing because we are still at the verbad on the weekly, and it's logical to suggest that at least the harmonic swing down could be formed. And potentially that should be a good opportunity for take the brand butter pie trade on the daily chart as well. So that's our trading plan now.